Hello, welcome to my masterclass, 5 year-end tax moves that you can make. Purpose of this masterclass is to go through 5 tax moves that I think every single business owner should do that your accountant probably won't tell you because let's be real, a lot of people often come to me and say that they don't hear from their tax accountant at all until the very beginning of next year when it's actually time to file your taxes. And personally, I think that is too late. So I put together this masterclass to kind of get you ready for the end of the year and make sure that you're saving as much money in taxes as possible. So let's quickly walk through what we're going to be talking about today. So we're going to talk about some tax strategies that you can implement before the end of the year, and then also the steps that you need to take to be able to implement them. So we're going to start off focusing on getting the full picture, maximizing your tax deductions, maximizing your IRA contributions, shifting your income around, and then also a tax strategy that a lot of people don't know about, which is renting out your home. And then I do have a bonus for you at the end, so make sure you stick around. Okay, so let's talk about getting the full. And what I mean with this is actually figuring out where are you in your business? How much money have you made? How much money have you spent? And then how much money do you have left over? And that amount is going to tell you, right, how much taxes you're going to look at paying at the end of the year or at tax time. So if you have a bookkeeper, you already have financials, go ahead and skip this module and just hop onto the next one because you're not going to need to know how to do your own books, right? So first, you're going to need a QuickBooks account to be able to even get the full picture. So if you don't have an account, I have a link in the description below that you can click and get 30% off your entire first 6 months. But the very first step that you're going to do is once you get your QuickBooks set up, you're going to go in and you're going to categorize all of your transactions. And how you do that is go into your QuickBooks. There's going to be a sidebar where you can click on accounting and then bank transactions. And so once you get into your bank transactions, you're going to see that all of your transactions are going to pull in and look like this. Now I've just zoomed in on one transaction so you can kind of see what that looks like. So this is just a sample company, but let's look at this transaction. You see it's called Books by Bessie. So this person spent $55 at this vendor, right, on August 19th. So you're going to go in here, go ahead and add the vendor if you want to. And then the account, this is where you're going to correctly categorize where this transaction should go. So you know how much you're spending on supplies. So for this transaction, we're going to put it to supplies. You can put it to office supplies. Maybe it was a business book that they purchased. So completely up to you how you want to see your P&L. It's completely customized. Main point here is every single transaction that you do see pop into your bank transactions, you need to clear all of them out. And right here you see match because there was actually a receipt uploaded that you can actually match the transaction to. So make sure you're going in here, you're cleaning out every single transaction, every single one, even if it is a personal expense that maybe you accidentally use your business card for, there's a category where you can put that. Okay. So after you have categorized your transactions, I need you to reconcile your bank statement. And this process is really comparing your books, which is QuickBooks, to your bank statements. Did all of the transactions pull in? Are we missing any transactions? Are, there tax deductions that are being duplicated, or are sales being duplicated, or are you missing out on write-offs? You want to make sure that the balance in QuickBooks is going to match your bank statement ending balance to make sure that everything ties out. And how you can do that is there's going to be a reconcile tab where you were at on the bank transactions that you can actually click into. It's going to tell you what account do you want to reconcile. In this example, we're going to say the checking account and the beginning balance. You want to make sure that this beginning balance matches what is on the bank statement. And then you're going to put in the ending balance that's on your statement and then also the statement ending date. And then you're going to hit start. Let's just say for this example, we're looking at an ending balance, $50,000. So that's what I put in. And then the ending balance was September 30th. Now you do see that there's a difference of $10,000. Your goal to make this go to zero. So what you're going to do is you're going to go line by line I know this is a little bit of a tedious process, but you're going to go line by line on each transaction and compare it to your bank statement and actually click on, and it'll highlight when you do click on these. You'll click on the ones that you do see on the bank statement. And the goal is after you've clicked on everything, this difference should hit 0. And if it doesn't, you have an issue somewhere and you need to figure out, okay, is something on the bank statement that's, it didn't pull into QuickBooks or vice versa. So that's how you reconcile and figure out if there's a difference. Okay. So you want to do this for every single month. As you see in this example, September 30th is the last month that was closed since we are in October as I'm filming this. So the next month would be October to close and reconcile. So once you have done that, the next step is to pull your profit and loss reports. This is the report that is going to give you all the details that you need to know. So again, we're using a sample company here, but let's take a look. Again, this is the new QuickBooks version, by the way. So when you go in here, you're going to want to click on reports on the left-hand side and then hit standard reports and then hit profit and loss. Okay, so this is going to tell you exactly how much money you have made, how much you have spent, and what is left over. So let's take a look at Craig's landscaping services here. You can kind of see he has all these different income sources for his business. You can, again, customize it however you want. He wants to see how much money he's making for each service that he offers. So that's why you see the breakdown here. So overall, he's made $10,000 from January to October, and he has some cost of goods sold here, but then all of his other expenses are categorized. So this is what you were doing when you were categorizing each transaction into these categories or buckets. It's going to show you how much money you've spent: advertising, auto, equipment rental, insurance, things like that. And then of course at the very bottom, as you can see, the 1,600, which just keeps popping up. But you'll see at the very bottom, 1,600 is his net income, and your net income, if it's positive, you have a profit. If it's negative, you have a loss. So once you get to this is where you can really start strategizing, okay? $1,600 in net income from October year to date. I wouldn't be super worried about implementing any tax strategies because most likely you're not going to owe a lot of taxes at all, or you're not going to owe any at all. But say you are profitable, you have $20, $30, $40, $50,000 in profit, then you may want to take a look at implementing some tax strategies. So this is where we get into the nitty gritty. So let's talk about maximizing your tax deductions. So once you have your P&L, you see a huge profit on there. We're going to make sure that you've taken every single possible tax deduction, because I do have clients coming to me that have spent money on a deduction that they didn't know was a deduction. So this is where we're going to make sure that you're taking all of the standard business deductions that you can. So home office expenses, mileage, education and training, and networking and meals. These are 4 categories that I see a lot of missed deductions in. So we're going to get into them a little bit, but let's talk about the home office first. So what you're going to want to do is actually get your home office square footage and your total home square footage. This is going to give you the percent of your home office that you can deduct. So say my home office is 100 square feet and my actual house is 1,000 square feet. That's going to be 10% of my whole home. So all of my expenses like utilities, my rent, I can take 10% of those expenses. Of course, you're going to have limits, but that's just the general rule of thumb. So you're going to be able to take rent, utilities, a portion of your phone bill, things like that. So that 10% is going to be what you can deduct of each expense that you spend. So on top of that, people forget about office supplies all the time. I don't know how, but if you're going to buy notebooks, pens, pads for your office, all of those things are tax deductible, okay? Computers, tablets, iPhones, like things that you need and use in your business. So same thing here. If you use a computer, only 10% for business, okay, write off 10% of that cost, okay? And then one of my favorite write-offs, office snacks, okay? So if you bought snacks to actually stock your office and not your pantry, you can definitely write off those expenses too. So make sure that you reevaluate home office expenses and make sure that you are getting these deductions. Now, you need to make sure that your home office is actually a dedicated office for you to run your business. Okay, so moving on, let's talk about mileage. Mileage. I feel like I talk about this too much, but not enough. Okay, so if you're not tracking your mileage, I want you to reevaluate that right now, because mileage is one of the biggest missed tax deductions ever. And we all drive to places, we drive to networking events, we drive to go buy supplies for our business. Like, every single mile counts, and you can actually automate this process. So you don't have to actually write down every single time you're driving somewhere. Okay. But let's talk about mileage. You need to actually track both your business and your personal miles. And my personal favorite app to use is QuickBooks. It's an all-in-one app. You have your bookkeeping in there, you have your mileage tracking in there. You can just turn auto track on and it's seamless. You do need to track both business and personal miles. And there are two ways that you can take the mileage deduction. Okay. We have the standard mileage, which is where you're actually just taking the business miles that you've driven and multiplying that by the standard mileage rate, which in 2025, that's going to be 70 cents per mile. So say you drove 15,000 business miles, your deduction is going to be about $10,500. Okay. So that's the standard mileage. And now we actually have the actual mileage method. This is going to be a lot more complicated because you're going to have to make sure that you keep receipts for everything. Okay. But basically, you're going to need to still track business and personal miles because you want to figure out what is the percentage of business miles that you've been driving. Then you're going to take that business percentage and you're going to multiply it by all of your expenses. So this can include gas, loan interest if you have a vehicle loan, repairs and maintenance. In this example, say you only drive 10% for business, you're going to take 10%, multiply it by $15,000 worth of auto expenses and get a $1,500 deduction. A lot of the time, standard mileage is just going to be the easiest way to go because you just need to track your miles. Okay. You do need a log. You need to indicate where you go, what you went for, things like that. So not just standard writing down your miles every day. Okay. And that's why I always recommend either getting QuickBooks or MileIQ because it's going to make your life so much easier. Now, let's talk about education and training. This is also a missed tax deduction that I see all the time. Me personally, this is one of my favorite write-offs because I get to go meet a bunch of people and write off everything that I need to get there. Okay. So let's talk about courses. Is there a course online that maybe you've seen and you want to learn from and it's going to help you in your business? Courses are deductible. Conferences. I love conferences. I love traveling to an out of state conference or out of city conference and being able to deduct all my travel on top of the conference ticket. Master classes. If this right here was a paid masterclass and you paid for it, that would be a business expense for you. And then consulting, training. If you're meeting with someone one-on-one, you're paying for their expertise, of course, that is going to be a deductible expense for you too. Okay. And let's talk about one of my other favorites, networking, meals, and travel. Okay. Of course, we all know networking events are deductible, right? If you're paying for an event, even if it's local to you, that's going to be tax deductible. Trade shows, if you're in the business where you do have trade shows, that's going to be deductible. Business trips, my favorite thing, because you can turn a business trip into partly vacation and be able to write off the entire trip. And how you can do is I actually have a video on this where say I am going to Miami, which I am going to Miami soon. I'm going to be going from Friday to Monday. I'm going to have business activities on that Friday and that Monday. I'm going to have meetings with business clients. Because I'm going on Friday and Monday, Saturday, and Sunday, I don't really have any business activities going on. I get to write off my hotel, my travel for the entire trip because I've wrapped my whole weekend. So Friday to Monday, obviously I need to stay in a hotel to be able to go to Monday activities. So my hotel is going to be deductible. Honestly, such a tax hack to get a little vacation in. And meals. Meals are 50% deductible, and I won't say go and just swipe your card for meals. You actually have to meet with a business contact, pay for both of your meals to be able to write it off. So you can't go buy a cup of coffee and write that off. So I want you to be able to take advantage of the meals, okay? Like take a friend out, take a business contact that you've been wanting to meet, go have coffee and just pay for both of you, and boom, there's a tax deduction. But again, make sure that you're documenting everything, who you're with, where you went, what time, how much you spent, what you talked about, things like that. Okay. So let's talk about maximizing your contributions. Now, this is a game changer if you have a retirement account or you don't and you want to get one started. You can actually deduct all of your contributions. Now, maximizing your contributions is such a hack because whatever you put into your retirement account, you can actually reduce your taxable income by. So, but before we get into all of that, let's talk about one of the best accounts you can possibly have. And this is going to be a health savings account. Okay. For an individual, you can put up to $4,300 into this account. Okay. And the family limit is $8,550. And this is for 2025. These accounts are amazing because they have a triple tax advantage. Okay. So the money that you put in is going to reduce your taxable income, which is amazing, right? And the money that you earn, so your money that you put in can actually earn interest, or you can even invest it. All your earnings are tax free. And the money that you take out, you can take out your money from this account at any time to pay for qualified medical expenses completely tax free. But the only caveat is you do need to have a high deductible health plan to qualify for one. $7,000. This is the amount that you can put into a traditional or a Roth IRA every single year if you're under the age 50. And this, of course, is going to reduce your taxable income by $7,000, but also help you grow your retirement savings. Now, let's talk about one of the perks of being self employed. When you're self employed, your contribution limits can hit up to $70,000 a year. Yes, you heard me right. $70,000 a year. Whether you have a SEP or a solo IRA, you have limits of $70,000 a year where you, as the employee, can put up to $23,500, and then the rest your employer would put in up to 25% of your earnings. So, huge, huge, huge advantage here. Put money into your retirement account, have that reduce your taxable income, and then grow your retirement. Okay. I'm not going to spend too much time on that because I want to get into shifting your income around. Now, for me, if I was married or if I had kids, this would be such an amazing tax strategy. But I do have parents. So, of course, I do implement some of these tax strategies. So, you can actually pay your kids, pay your spouse, and pay your parents from your business, have it be a write off for you, have it be a benefit for them. Okay. So, let's get into paying your kids. And of course, you're going to have to pay your kids for legitimate business work, okay? Not just cleaning your house or cleaning your office, okay? But if they're under 18 years old, you can pay them up to the standard deduction. So for 2025, that it's $15,750 that you can pay your kids. They won't have to file a tax return and they won't have to pay any taxes if they're under 18 years old. Now, don't take this literally where you can just give your kids $15,000 and say that they did work for you. They do need to have to do legitimate work for your business. You have to document everything and you have to pay them a reasonable salary, okay? A reasonable wage. You're not going to pay your kid $15,000 for cleaning your office, okay? So, when done correctly, this is a huge tax play that you can implement. And the best thing about this is you can have any tax structure and implement this, okay? And I love that when you pay your kids, you can have them pay for their own expenses, okay? Like daycare, entertainment, after school activities. They can pay for all of their expenses because I know kids are expensive, okay? And because you are paying your kids, you're giving them earned income, which can allow them to contribute up to also $7,000 into their own Roth IRA. So, huge tax advantage, right? We all know the earlier you start investing into retirement, the more money that you're going to have. And this is so huge on setting your kids up for success in the future. Now let's talk about paying your spouse. I love this strategy if, you can deal with having your husband or your wife working with you in your business. This is a great, great, great strategy that you can implement because then you get to double the salary for your household and the deductions for your business. Double the salary, double the deductions for your business. Love that. You can double the retirement contributions and the earnings for you and your spouse. And you can double the home office expenses needed to run the business, such as that phone, that laptop, internet. You can reimburse them for all the expenses that they incurred working for your business. Okay. So then also, my favorite part here is that you can double the mileage deductions and the travel expenses for your spouse. And yes, that includes going on business trips or having board meetings in cool places too. Let's talk about paying your parents. I love this one because you can keep even more money in the family by hiring your parents for doing legitimate work for your business. On top of that, you get to help them contribute to their own retirement accounts. You get to help them pay for their medical expenses related to medical, dental, and vision. You can actually set up a plan where you can reimburse them for these expenses. And you can take them on business trips with you, help keep them active and healthy. I love keeping money in the family. So if you have any family members that you would want to put on payroll that you think can really help your business, this is an amazing strategy to implement. Now, let's talk about strategy that a lot of accountants definitely are not telling you. The Augusta rule. I know you've heard this before, but let's talk about how you can take advantage of this to save a ton of money in taxes at the end of the year. Okay. So, first of all, that's such a beautiful house. But let's say that you hosted a meeting here or you hosted a retreat, right? You can rent out your home to your business for up to 14 days completely tax free. The business gets to write off this rental expense for the business. And then you, as the individual who's collecting the rental income, does not have to report it. Okay. Now, you do have to actually own your home. You can't rent your home and try to implement this rule. On top of that, the only people who can actually take advantage of this are S Corps, C Corps, or partnerships. So you basically cannot be a sole proprietor and try to implement the Augusta rule. You have to have a separate business entity, okay? You must also charge a fair rental rate per night. So you can't just say, hey, I'm going to charge my business $1,000 a night and write off $14,000 worth rental expense. Okay. It does not work that way. If you look at neighborhood comps and the rental rate per night is only $100, writing off $1,000 is going to get you in some trouble. Okay. So make sure that you're charging a fair rental rate for your property. In some ways that you can implement the strategy, host a retreat, host a mastermind, or host a business event. It is such a great strategy for you to implement. I know business owners who have deducted so much money by implementing the Augusta rule. You can actually implement this every single year. So this is free money that you get to write off for your business and free money that you as the individual gets to just pocket. Okay. So I love, 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 love this tax strategy.